You know, you look at a bull market run and think just stocks. There are other ways you can invest and other ways you can make a lot of money. And if you like to invest in things that are not just equity, you have a wide choice from precious metals to everything in the agricultural commodity market, from barley and wheat and soybeans and, not so coincidentally, all the stuff caught up in a potential trade war that's going on globally. And doesn't this next guest know it? The CME Group Chairman and CEO Terry Duffy. Terry, good to have you.
Thank you, Neil. Appreciate it.
You know, it used to be the old run that if stocks are having a bad day, commodities, the things that you oversee are having a good day. That's no longer thought to be the case. They can both have a wild ride, a good or bad. What changed?
Well, I just think that, you know, you started off talking a little bit about the tariffs earlier, and I think when you look at the markets today, they're so global in nature that they become interconnected instead of disconnected like the old days. So the interconnection of the marketplace, we're all dependent upon each other. That's why global trade is critically important. That's why, you know, the United States, China, Canada, Mexico, and the European nations all got to come together and get these trade issues resolved, because it doesn't help anybody to have these things linger, because they are connected, and we are connected. The world is much smaller.
You know, do you think there is a method to what the president's trying here? He says he can be very, very patient, but he's been very all over the map on who he wants to target and how much he wants to target them. And he leaves people confused. Does he leave you confused?
I don't know if he leaves me confused. I look at, you know, running the marketplace, Neil, as you know, and all I can say is I don't think tariffs are good for the markets. I don't think they're good for global trade. At the same time, we need fair trade, so I can understand where the president's coming from to some respect. But eventually, we got to call the question here. And I said this to you not too long ago. I think that eventually these tariffs, they start to have an impact. And I think China is wanting to get to the table sooner rather than later. It is having an impact on their economy. You look at their currency, is, you know, hit record, not record lows, but lows last week. So again, I think that not only China, but, you know, the European nations and, of course, Canada and Mexico would love to have this issue resolved. But what the president's thinking, I'm not quite sure. All I know is that the market is a global market, and whether you're investing in derivatives or you're investing in individual stocks, you'd like to see this resolved.
That is a very politically correct answer, young man. So I know where you're coming from. So, Terry, I'm curious about something here. There's a lot of worry about inflation rearing its ugly head again.
Yeah.
Of course, it would have to go a long way to get back to what maybe you and I can remember. But there is this fear that the Federal Reserve is going to have to get ahead of it. And then Jerome Powell, despite the criticism he's getting from the president, apparently now told a sympathetic crowd that he regrets choosing the guy. Do you think that's going to be a big worry? And going forward, maybe it helps a lot of the commodities and stuff that you trade in, but that it changes the dynamic a little bit.
Well, I didn't hear that the president said that he said he chose the wrong guy, because I think that would be a mistake to say that. I think, you know, Chairman Powell has done an exceptional job in the short period of time he's been there.
Well, I want to be clear, Terry. He mentioned this last week at this Hamptons event, where he said, had he known, I'm paraphrasing here, that he would be hiking rates as aggressive as that, he would not have done what he did. But it's done. He's the Fed chairman now, and a lot of people say he is going to start hiking rates to address inflation or to get ahead of it. What do you think?
I think he's taken a realistic approach. I mean, listen, the Fed only has so many tools. They're taking down their balance sheet. You know, we have the only Federal Reserve that does not hedge their portfolio of their balance sheet around the world. So now they're taking that balance sheet down. That means others have to assume that debt. They need to hedge it out. So when you look at what Chairman Powell's trying to do, if in fact the economy has a downturn, you know, he's got so many levers he can pull. But if he's got rates at such historically low levels, he's got very little room to the downside. So why would you not want to take advantage of the economy that the president has been touting, the unemployment numbers have been touting, to raise rates, even though you don't have inflation, so you have some tools in your arsenal just in case the market does have a downturn? To me, it makes pure good economics business sense for what the chairman's trying to effectuate, along with the other Federal Reserve directors.
You know, you think about it now, it's easy to mark now the low point at which we would come clawing back, you know, when we got down to 666 in the S&P 500. Little do we know then that that would be the start of the turnaround that would produce the longest bull market in history. But now we're looking at an environment where people are saying, well, then this can't go much longer. Is it your sense that this can't go much longer?
Well, you know what, Neil, I've always known that when people try to predict high tops and bottoms, they're normally wrong, but then eventually somebody will be right because it's just, you know, the catch a falling knife theory. So I look at what's going on today in the marketplace, and I don't think people are really evaluating the efficiencies that have been created from the last bull market. So you look at 1990 to 2000, which was the dot-com bust, obviously, but a lot of technology was discovered through that time period. A lot of it went away. A lot of it's being deployed today, which has empowered the consumer to a point where I don't think any of us ever imagined. So that can extend markets a lot longer because of technology, efficiencies, capital efficiencies, and look at some of the growth of the companies that we've seen in America. We got a $1 trillion company in Apple, the growth of Amazon. So you can look at that, but then look at some of the smaller companies. They've been able to grow. You know, the United States has historically been a safe haven for investment, and that has really accelerated over the last couple of years, especially what's going on around the rest of the world. So it doesn't surprise me a bit. I don't know if the top is in or if it's just the beginning of another leg up. That's not for me to decide, but I will tell you, I think we live in a different time than the prognosticators had back in the 90s or even the early 2000s.
Well put. You can always make money on the trade as well, right? We always forget that.
Yep.
Terry Duffy,
sure.
CME Group Chairman and CEO. Great seeing you. Thank you very much.
Thank you, Neil. Appreciate it, buddy.